Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Good afternoon. No, good morning. Well, good morning where you are. Maybe you're on the West Coast. Good morning, good afternoon, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'm your host, Tom Schneider, CMT. And today we've got a great topic. Let's welcome Anthony. Anthony, how you doing today?
I'm doing great, Tom. How's everybody out there doing? I'm excited for today's show because it's kind of feeding off last week's Ask DYE question, which is why it's so important for everybody to ask DYE questions.
Yes.
Remember, you got to follow Ninja on Twitter and just use the hashtag AskDYE. And, you know, I'm doing a whole show on it now.
Yeah, I love it. It's a great question, a great topic, because I have questions for you. You know, when you think about the topic today is placing stops, right? Where do you place your stop? When do you place a stop? And it's not, I don't think it's as straightforward a topic as you might think. It's as I was thinking about it, there are 4 situations right off the top of my head that I was thinking stops could be involved, but I'm getting ahead of myself. I'd rather hear your take on this. 26 years in the business, like, I can't compete with that. I want to hear your take.
So where you put your stops obviously is going to be very personal to what your strategy is, right? And the first things I always look at is when I'm looking to place a stop is, where am I wrong, not where I'm right. And so I look for invalidation versus target. So my mindset always goes to, if I like this entry, where don't I like this trade? Where don't I want to be in it? And so that's all I really want to look for when I'm looking to place a stop. I just keep it super simple. And then from there, I look to say, okay, what are my potential targets? And does it make sense for me to put this stop there? And for me, that's it. And what I like to do is I like to have an area that, where today we're going to look at VWAP. We're going to look at standard deviation lines, and we're going to look at order flow cumulative delta. And I like to look at reactions to the area I like, and also to help me with my entry. And I'll also look to see if I want to move that stop a little bit based upon the action at entry. And I'll also look at what type of day it is and what type of market it is. And what that ultimately means is, what is the environment, right? Like, today's an uptrend day. We had a gap up after a CPI number that the market liked. Why do I want to step in and be short? Like, I really need to find a confirmation as to why I'd want to be short. Deltas to the upside. We're above the order flow VWAP from the open. You know, overall trend has been bullish. Market got the information that it wanted from CPI. We've moved past it. And so the buyers are stepping in. And so if I'm looking at a short today, the stop is going to be really, really tight. Because why would I want to have a wide stop on a day that I have all of these things contradicting what I'm looking at? And so the context of the environment makes a big difference to me. Now, on a long setup, I got to wait for the first pullbacks that I'm going to get. And I actually recorded something this morning. I'm going to play a video right before I was getting ready to go and develop your edge, because I'm trying to trade more during these 30-minute time frames. But it's hard because I don't know if I'm going to get a setup or not. And I might, but I want to show you guys what I was looking at was, anytime I got sort of a pullback, I was stepping in and buying it, watching cumulative delta. And because the market had already made a reasonable high, a reasonable range today on a big gap up, part of my thinking is, okay, I want to keep this stop now maybe a little bit tighter. Maybe I use the recent low on a move down, and then I try to rotate out of it and then rotate back into it. And so before I get ahead of myself, I think maybe we pull up the charts and we look to see where everything really stems from. And everybody knows that that watches this show, everybody, I should say, that I love the order flow VWAP anchored to the regular trading hours opening 3-minute bar. I also like standard deviation lines because standard deviation lines around a VWAP work together with cumulative delta. So it's volume and price. All of the stops I'm going to be showing today and talking about today are for day traders, right? If you're looking to trade intraday only, this is the setup that I use. Swing trading, you're going to be a little bit different in how you're going to be placing your stops. It's going to be more about price and probably less about volume, right? But when you're intraday, I like to have my tools, my indicators kind of feed off of each other. So you have volume weighted average price. I have a standard deviation line around a volume weighted average price. And then I have volume from cumulative delta, right? And so the reason I like those three together is because they're all order flow tools, which you can get on NinjaTrader. So let's look at the week. This is something I have not shared with everybody before on this show. And as you can see here, I have the Trade of 8 dome up there. And if we do get a look, I will step in and trade it and show you guys exactly how I do it, but we'll see what happens. I kind of want to go over the charts first. So if you go back and look at the week, what I do is I keep just the regular trading hours on here. And what I do is I'm looking at the standard deviation lines and the VWAP lines for the week. And I haven't discussed this before. I've only discussed the day. Now, when you get a week like this week where the market had some data like CPI and the market, and I put this out a lot on Twitter, I said, I think it's going to be a lot of back and forth. I really love standard deviation lines to look out for the whole week. It kind of webs the week out for me. So we start off with Monday. And what I did was, here's Monday's range. I drew a horizontal line at the VWAP and the 1, 2, and 3 standard deviation lines above. So when I get to today's market, I can see where they are. I also noticed that this second standard deviation line or first standard deviation line from Mondays coincided with the third standard deviation line on Tuesday. And it also coincided with some lines this morning. So that line is like, okay, very important. Once again, it all feeds together. Volume weighted average price from each day and what a standard deviation lines above or below it, right? And so when I look at what was the highest standard deviation lines for the week, you had 45.40. And then when you looked up top, you had 45.40, not even quite 45.49. It was more like 45. Well, that's what today's is. This one's 45.47-ish. And then today's came in around 45.49. So that you can see that 3 standard deviation lines for the entire week, a blow off big move higher would be 45.49. So anything that I were to look up into that area, I would say, wow, that would be something I would probably even consider even shorting with a tight stop. So I kind of have my levels kind of boxed out, right? And then you look at the cumulative delta. Let's get into today's because I want to get right into today's trade. Actually, might even get a trade set up here in a second if we start to pull back down. I actually probably would have been long already and stopped out, to be perfectly honest with you. But we had a big sell-off yesterday with negative 20,000+ cumulative delta, right? And so when you come in today, something that I look at is like, okay, you have a CPI number. Remember I said context of the situation. Big negative delta yesterday coming into CPI. So 20,000+ negative delta, which means that there was 20,000+ sold on the bid versus bought on the offer yesterday. You get a gap up with a positive, well, you call it positive CPI if you want, but the market reacted positively. We go up, opening 3 minutes is the low of the day. Market goes up, spends majority of the morning above the VWAP, okay? And cumulative delta is positive about 8,000. So what's happening is we're unwinding a lot of the delta for the week, and we're going to push up against the top areas, the standard deviation line. So I could see that's why I drew these horizontal lines. And it's pretty incredible how they're relatively close, coinciding with the standard deviation lines and even VWAPs for today's, which I really like because it gives me really definitive areas. And so on a day like today, because of coming off of a negative delta yesterday, a week that's been somewhat bearish, you come in with a positive gap up day. I want to see squeezes to the downside near support, which is standard deviation lines or VWAPs. And I'm going to use My stops are going to be 50% between each area and look for the full retracement back to the next standard deviation. So let me explain that. We actually might get one down here. If we get to 23, I would step in long. And what that would mean is, let's just say that were to happen. We get down to 23.25. I want to see delta squeeze lower. Okay. So I want to see this delta come in negative. And then what I want to see is, I want to see us hit this area, sustain it for, even if it's a few seconds, step in and buy it, and put my stop in 50% in between the standard deviation lines, because I'm looking for a full retracement back to VWAP. Okay. So 23.25 roughly down to 14.5. It's, say it's 9 points, 4.5 point stop. So just to make it easy, let's just say the stop is 45.19. Okay. 19.25, somewhere in there. So I know right away that if the market blips down here, I want to be able to step in and buy with around a 4.5 point stop, because I'm going to risk 50% of what I think the retracement would be. Because if I'm going to be long around 23, my target's going to be right around 31.75, which is VWAP, somewhere in that area. So I'm looking at somewhere around, 8 to 9 points of return. And so I'm going to always risk about half on a day trade of what I think the first potential target will be. And so maybe I bring Tom back in and we start to, wait, maybe we get a trade and I will step in and I will take that trade if we get down there. Actually, we're actually going to get pretty close. So Tom, I don't know what you think about what I'm talking about so far.
So I think it's great. I think, my question is, we've used order flow cumulative delta to see yesterday was very negative at the end. So now all those positions could be buyers today, and especially with the event that happened this morning, pushes the market back up. And then we see cumulative delta turn negative as we pull back again. When you hit that level, right, of that VWAP band, you say one standard deviation VWAP band below VWAP, and you want to step in, are you also looking at cumulative delta at that point? Would cumulative delta change your mind if it suddenly turned real negative versus just the little baby bars we're seeing now? Or if it's really positive, you want to be really aggressive? Does it inform you, or is it more about the level?
Well, cumulative delta, what I want to see for today is it to stay positive, and I want to see negative delta bars into support. Okay, that's what I want to see. Let me make this bigger. So what I look for delta is mean reversion in delta, and I want to see extreme mean reversion bars, extreme. So like this is actually relatively extreme based upon what today is. We got positive delta around 16, 17,000. You can see I put my bids down there. I didn't get filled, but if it gets down there, I will buy them. And I'll put my stop in, like I said, around 19. And what I'll do is I'll say I'm going to do a max of a 10 lot position in micros. So I'm using micros because it allows me to, be free with my execution while I'm doing these live streams. And remember, a micro is 1/10 the size of an E-mini S&P, which is what I trade most of the time. But it allows you to scale in more openly. So I'm going to get up to 10, and I'll say, I'm going to have roughly 4 points of risk from pretty much my worst position, my worst ad. And what I mean by that is like, if we get down to 23.25, 23, I will start to buy in right there. And because delta's coming in negative, so this goes back into why I like looking at delta. So because delta's coming in negative now, I know that there might be a little bit of a flush, right? So here we go. Let's get down here, and there we go. I stepped in 2. I didn't even get filled. That's how fast that blew right off. And I don't like to typically work the bid too much. That's crazy that I didn't get filled on that. But see how the delta's extreme right here? It's because I'm looking at the camera and I try to do it at the same time. I wouldn't miss that normally. I can tell you that right now. So you see that right there. That's where I would have stepped in, because that's the squeeze I want. See how the delta squeeze came right into a standard deviation lines? Of course, they're going to blow up here and rally on me. It's pretty funny how that works. But that's what I'm looking for. I want to see squeezes from delta into standard deviation lines. I'm going to keep them in. Maybe they come back and backfill me. But the reason why I want to do it, I want to see that, is because I want to see delta stay positive, and I want to see longs from today step out of the market, and I want to use basically their stops as potential ins. Okay, so I'm filled now. I've got 4. Like I said, I'll get up to 10. I told you my stop is 19. So there we go. I've got, you can't maybe see it. It's just off the screen. I might get filled right away. I got filled. So obviously, I lost on that trade. I'll look for another squeeze around 14.25. If we were to get down there, VWAP is still above opening 3-minute. Let's see if we get down to 14.25 and I'll be ready again, 45.05 half. So is there any news I'm missing, Tom, or no? Because I don't have that up right now and I want to be trading like, if I don't know what news is going on here. I don't have my news stuff up as I'm doing these shows.
Yeah, the only thing that really comes out is at 10:30 is the natural gas. I don't think that would affect this. I don't see any news coming in on the wires right now.
So you got 13.75, 14.25. So I've got basically 13.75 is 05. So it's once again, it's a 4-point stop. And so I want to look somewhere around there to step in. And once again, so the delta here, it's very interesting that this is happening during a live session. What's happening now is that if we were to go and get negative delta, so I got filled on the 14.25 and 14 halves now. I'm almost wondering if there is some news because this is, man, I don't want to say uncharacteristic, but 4.5 points of risk. So I'm going to put my stop in right now at 10. I'm actually going to put it in at 10. And so now I look at this because volume is coming in so strong, right, to the downside. I'm actually going to take a 4.5 point profit and take off half the position. So I'm working 18.75 because I bought 4 quarters and 4 halves. And I'm going to take off half that position if I get 18.75 fills. And I'll show you exactly what I do next. So if I were to get filled on those, so I'm watching that, and then I'll explain why. Hopefully I get them here in a second. But the reason why I'm doing this is because now Delta's getting in really, really strong, and maybe the day is potentially changing, right?
Yeah.
Maybe, the Delta is going to go negative, and all of a sudden I'm like, whoa, you're gonna. So I'm filled. So I got filled on half. So I'm still long 2. What I do is I come down here, I delete this, okay, and I move it to 2. I know it's part off my screen, but I had to move it off to fit it in here with the chart. So now I'm long 2. What's my full target? It's 21.75. And so that's where I would get my full potential of the target. Because trend is a little bit lower now, a little bit weaker, I'm not going to get greedy. I put a stop there. I'm going to work a 2 at 21 filled. So now I got out of it. And so it goes back to, got my money back from the other one. But the point of the matter is like, that's how I work them. Squeezes into support. And then when they do it, I just step in and buy them, right? I mean, there was no way I could have even gotten to 10 in that position. That's why I'm starting with 2s. A lot of times I'll do 3s or 4s, and the same thing, when I'm trading E-minis, I usually do a third at a time. And I'll just clip in, work my stop. Because once again, my stop's 50%. I know there's got to be some slippage around these lines. Okay. Because let's face it, they're not perfect. If they were to get down there only a little bit below it, I don't want to get stopped out. So I use 50% all the time. Now, something different that I would have done if we weren't just, I don't know exactly what's going on with the news at this current moment. And maybe there is, maybe there isn't. At this point, it really doesn't matter. But let's just say that hypothetically, this one would have held. Okay. My first one would have held and I wouldn't have gotten squeezed out. I would have only taken off around half, around 45.30 half. And I would have tried to hold to 45.39 because the context of the day is a trend up day, right? Obviously that could potentially be changing here right now. I'm just going to make sure I'm not working anything in any other markets as well. Okay. Just double checking here. So that is, once again, I'm always based upon what's happening right now in the market. And that's why I like standard deviation bands with the VWAP and the Delta, because I get a picture of what's happening. Delta's still positive on the day. And who knows, maybe this was just a big squeeze. Maybe that was the lows. I don't know. But right now I got to sit back and watch. And now as we sit here and watch, a couple things I'll start to look at. Does Delta start to fall off now? Let's just say Delta here starts to sit around positive 2,500, maybe grinds back up to 5,000, and they start to stabilize above 21.5. And I look at this and go, man, that was maybe the squeeze low that happened. Then I work the bid back at 21.5, go back to my stop, which would be 4.5 points, because that's about what the distance they are in standard deviation bands. And I would start to work my way back in because I'll just, once again, watch the reactions around the standard deviation bands. That's what I do in all day, pretty much every day. And you can see what's interesting is that I'm actually going to go back. And I didn't put this here before, so you could just hit your F6 key on Ninja. And why did I do that? There it is. So on a really blow off low, right? Not necessarily really blow off, but yesterday's VWAP comes in right around 45, just above 4,500. 3 standard deviations, 0.3 What would be interesting to me is a blip down to a 3 standard deviation. Okay. Delta stays relatively positive and we almost get some sort of capitulation. You've got yesterday's VWAP back tested and a 3 standard deviation. I would step in pretty aggressively there. I would try to get to 10 as fast as I could, because that's an area where if they don't hold, I know I'm wrong right away. Like if that doesn't hold, I'm blowing out, because very rarely on a gap up day with the Delta positive, am I going to see outside of a 3 standard deviation move from VWAP? It doesn't happen very often, if I've ever seen it. I mean, I'm sure I've seen it in many years that I've been doing this, but it's so rare that I can't remember an occasion that it happened. So a 3 standard deviation move away from a VWAP on a trend up day, unless it's news driven and I'm missing it, that's different. If it's news driven, then you throw everything out the window. Right. But if it's not, and yesterday's VWAP, I like that area. And so I know we did actually quite a bit today of going on. I'm so glad that we got these live setups because you were able to see a loss and why I placed a stop there, and it filled me instantly. But then by staying with it, which is what I would do, I stepped back in at the next level. I at least got 4 on. I would have liked to have gotten more on because it would have compensated more for the previous loss, because that's kind of what I'm going to be talking about leading into next week is win rate doesn't really matter that much to me, because that 4 lot might have been a loser, which it was. But that next trade, if it would have just stayed down there just for just maybe another 15 to 30 seconds, I would have gotten 6 to 10 on. And, that would have made a lot more than my loser, which is I'm kind of plugging next week's show.
Right.
But yeah, I mean, I think we covered a lot today, and I don't know if there's anything you have to add or questions about what's going on right now. It's a pretty busy day.
Yeah, no, I have a question, Anthony, and it's about the difference between price and cumulative delta. So right now, cumulative delta is positive. It's been grinding down as well as the price has. So it's kind of in lockstep with price right now, which isn't, that isn't unusual. I think there are 2 circumstances that would seem to me could be opportunities, which is if price keeps grinding down, but cumulative delta stays positive, that to me is fairly bullish. Yeah. Would you agree to that? And then the other thing is what happens if price goes flat, right? It goes sideways, almost like what we have here. We're trading right where we were 2 candles ago or 2 bars ago. But cumulative delta keeps declining. So at some point, maybe cumulative delta goes to 0 or negative. Is that a possibility? And what might happen? Does that make you less reluctant to go, your original plan of let's say hitting a VWAP band like the next one down, and when it does move, if cumulative delta is negative, does that really kind of change your attitude towards going long again?
If cumulative delta were to go negative, okay, and the VWAP would still be above the opening 3-minute high, I would be still looking for longs tentatively, unless there was news or unless there's just like the delta's growing so much. Because most of the time, so let me just say this, you're not going to see delta on very rare occasions again, where you get a day like today where we're majority of so the volume is still up on the day, even with that big break. Right. Okay. You're not going to see delta go strongly negative without that VWAP coming down a lot. And so it's still saying the volume weighted average price from the open is 29. I mean, if it starts getting outside of 3 standard deviations below there, I have no place to get long anyway. But if it got negative down to a 3 standard deviation move, that's about a low risk of a trade is I'm going to take, in the sense of I know almost immediately if this doesn't hold, I'm wrong. And so I look at it as, I have no way of calculating whether or not this delta coming in to the sell side is some big thing happening in the background that I don't recognize that's happening. But at that current moment, I'm still going to step in long because you've got VWAP higher. You still have, for the week overall, a sideways week. I look at everything in the context, and I've been saying this, it's a two-way tape. I love extremes of the fear on the bottoms and or the tops. And so a day like today, like see how Delta's starting to firm up. It's just like, I'm looking at this day going, unless there's something I don't know, I'm still going to buy the next 2 standard deviation line test. It goes down to 1175 down there again. I would have bought it again. It's hard to buy the 2075 right now because now you see, okay, Delta's firming back up. So let's take it back into the context of the day. I know we're running out of time, but now Delta's firming back up modestly, but it's firming back up. A pullback to 2075 now, I look at that and go, what do I do? A lot of times what I'll do is if it pulls back there, I'll work the bid.
Yeah.
Get in, feel it. If all of a sudden they're blasting me out of it again, like the last time, well, I get stopped out. It's over. But I'll work the bid. How does it feel? You know, I know, and I am someone who likes to feel once I'm in a position because it's like, I know that if it's in and all of a sudden I'm uncomfortable and it's going against me and I look around going like, what is going on? That tells me, don't be aggressive, buddy. Smarten up. Don't just be like, oh, I'm clicking in at 2075 because it's a standard deviation line and I just get, planted. I like to step in small and at least see what's happening, right? Because I learn a lot from a small position. And so that's what I'll do. And, this business is so much about easing your way in when you need to ease your way in, be aggressive in when you need to be aggressive in. Like, I know the day I still think is bullish, but I'm not going to be stupid and be aggressive in. I'm going to ease in. If I'm above VWAP and I see a little bit of a pullback to a 1 standard deviation line or the VWAP and it's holding and Delta just was a little squeeze, I could be aggressive there because I'm not seeing somebody fighting me too hard, right? Volume's not fighting me. So I could step in really aggressive. Right now, volume's fighting me a little bit. So ease your way in and, put your stop in right away. And that's just the way I operate. To me, it's always about the context of the situation. What's happening right now? I put this tweet out many years ago. I said, no 2 trades are the same. Why would you ever trade them the same? My mindset and my process is the same each time I approach it. But if I'm going to say, like I said, for example's sake, I'm going to get up to 10 micros today. Well, not always am I going to just be in all 10. Sometimes it's going to be 4. Sometimes it'll be 8. Sometimes it'll be 7. I don't know because I'm going to be working my way in. And it's always going to be based upon that. But today we talked about stops. Hopefully I cleared up for you guys and everybody, because I know we're going to do Ask DYE next. How I do stops, how I rotate around positions, and, know where you're wrong before you're getting out.
Oh, thank you for that. That's great. And speaking of the question, anybody watching, if you have a question for Anthony, you can certainly tweet it out or post it out or X it out, whatever they call it now, using the hashtag AskDYE, and just make sure you're following NinjaTrader. You can put @NinjaTrader in the tweet as well. Just ask the question. If we use it and you live in the United States, we will send you something nice. Today's question is this topic, and it came in last week. I think it was a response to one of your tweets, Anthony, but the question is from Bobby Chan, LEV, and it's, do you close a position before hitting the stop or leave it alone? What would you look for in terms of invalidating the entry? If so, thanks, guys. Love the show. Thank you for that, Bobby Chan. But curious to know your answer, or did you already answer that, Anthony?
No, I didn't answer it. That's a great question, Bobby. That's where you get into really the nuance of it, right? And so when I look at that scenario, let's just say that my stop, I had my target filled, or I got in, I have my stop in, and all of a sudden we go up and my target is not filled at 29.5. Let's just say I'm looking for VWAP, right? And I'm looking for VWAP up there, and I'm looking at Delta going, man, they are trying to get up there, but they can't. 29.5 for my target seems like unreachable right now because I'm looking at Delta. This is why I like order flow tools, everybody, because it helps guide me in the position. And so see how Delta is now struggling to really stay positive, even though we're above a 1 standard deviation, right? I look at it and say, do you want to be smart here? Did I get equal risk to reward? Do I want to reduce my stop? When I start to see Delta fall off here, and let's just say I was long, I'm either going to move my stop up to, a tighter stop, or I'll look to take less of a profit on the position based upon what's happening with Delta. So as you can see here, the Delta tried to go up and then it's coming right off again. And so what you're seeing is price reaction below a VWAP, which could have been my target, and sellers are coming in. And so I have to be smart about that and say, it's telling me I may not get it. This is not a great environment to just sit long right now. So of course I'm going to get out prior to stop, because if my target doesn't seem like it's in reach, then why am I going to hold it? I mean, at some point you just start going, listen, man, I got to go back to the drawing board. You're not getting clean rotations right now because Delta's coming back in negative again here. It's just pretty interesting of a day, because if this starts to get negative, like I said, you could see a real squeeze. So for me, Bobby, I don't always hold things as stops. The volume, the order flow will help direct me, is what I will say.
Awesome. Thanks for that. And thanks for the question, Bobby. Really appreciate that. And I think we have a little bit more business, right, Anthony?
Yeah, I'm going to, this week I actually talked with Blue Putnam on Futures Radio Show for CME Group. He's a chief economist, talk about never fighting the Fed. He had CPI data today. I would go and check that out. It's on my Twitter feed, and Blue and I had a great discussion, and we talked a lot about like CME Fed Watch tool and things like that. Just, I think, important tools to watch, especially following a day from CPI. And who knows, that might be some of the things that I want to go and see what is happening in SOFR futures and the Fed funds rates, because who knows, that could be some of the things that are driving this. So you can check that out just at anthonycrudele.com.
Well, thanks for that, Anthony. And thanks for everybody for joining Develop Your Edge with Anthony Crudele. We'll be here, I believe, next week. We'll be back again with another great topic. Anthony always just has the most interesting topics. I know I'm speaking like he's not here, but he's here. And it's always fun to talk to you, Anthony. Thanks for doing this.
Oh, it's great, everybody. Thank you so much for putting your questions out there. Ask DYE. I love them. And, we build shows on them. So, we're listening.
Yes, thank you. And we will finish the day with everybody's favorite Mike Burke at bars closing 3:15 today. In the meantime, have a great trading day.